going on, guys? Good afternoon, guys. Happy Sunday. Gonna get started here in a few minutes. Appreciate everyone tuning in today. I'll get everyone going, and really excited for this session. Arguably one of the maybe biggest weeks of the year so far. So this is gonna be a lot to cover, a lot of grounds to cover. Spent probably the last 2 hours looking through things, and have a ton to go through. So we'll get started here momentarily when everyone jumps on. Awesome. Okay. What's going on, guys? People are trickling on now, and get ready shortly. Fine. Okay. What's going on? Gleesh, how are you, sir? Yes, going to be a very big week. Markets have been sort of, I would like to call, just dry. Very slow, dry, maybe the last month or two. Very, very, very tight range, low liquidity. Hopefully we get some nice setups this week. Going into the next couple weeks, going to be talking about positioning, going to be talking about earnings, numbers, potentially ranges, and some technical levels, I think, that are definitely worth a watch. So big session today. Very excited for it. What's going on, Rusty? As people start to trickle on, we'll get started. This one I did not reach out to. We're not doing that. I didn't promote this one on public, so this is just for the Spud Zone members so far today. So sort of a very concentrated group of sort of focus here. So we'll get through this in a minute, guys. Just give everyone a minute or two for the people that are technically inept like myself. So we'll just give everyone a couple seconds to jump on, and we'll get started. Definitely get your notebooks ready, pen and paper or laptops for some notes. There's going to be a lot of content and a lot of coverage today. 40-minute session about, so if you're trying to time yourself, it's going to be great, and this will help you prepare for the week, and we'll go through a ton. So just give everyone a second, and we will get going. What's going on, Cal? You're at the gym getting a lift in. There you go. Good work. I'll try and discuss it at the end. Yep. What's going on, Robbing Marks? How are you guys? Happy Sunday. Awesome. We will get started in a second. Starting now. Starting session now. Starting. Excellent. All right, guys, we're going to get started. Happy Sunday. This is Spud from Spud Zone. Obviously, you guys all know that. I did not put this one out on social media, so most likely this is going to be a tighter-knit group, probably just some subscribers here, guys. So thanks for joining. Happy Sunday. Hope you guys are doing some prep and some scan for the week. For those of you who don't know, here is the big slate we have for this week. Quite a big one, guys. Tons of market weight, tons of mega cap names. We're going to have consumer staples, discretionary, huge mega cap tech. We have oil and gas, energy names, the biggest and the baddest here. ExxonMobil, Chevron, to finish up on Friday. We have consumer name before Monday, before open Monday morning, Coca-Cola. That's always a Coca-Cola and Pepsi. They're pretty much huge sort of consumer monopolies in the States at least. So we're going to have a good understanding of what the consumer is buying in that front. We got some communication names. I'm going to talk through a lot of this. The ones I have highlighted in red, I probably could have highlighted every single name on this sheet, guys, but I'm just highlighting some of the focus. Keep in mind, I believe I saw somewhere 18% of the S&P 500 is posting this week earnings, right? So that's just 18% of the index. If you go by weighting and market caps, you're probably 20 to 30% of the entire index in terms of weight. So we could potentially finally start to see some movement in the markets, and that could be a big upside or that could be big downside. And so this week into next, I think is going to be some larger moves on a lot of these names, and there's going to be some good trading opportunities. Going to talk through maybe some strangles, some puts, some calls, and how I'm looking to potentially play some of these names. I do also have some favorites now that I'm watching. I know you guys rarely see me put long-term, multi-year sort of ideas out there, but going to kind of talk through a few names where I think could be maybe some opportunities where you want to start to dabble. Intel, NTLA, CHPT were 2 or 3 I've given out this year or in early January throughout the year that have performed, pretty well. Those are some of the names I like longer term, but as you guys know, I still think the market's pretty expensive. So I'm waiting to sort of get those cheap discounts. So I'm going to talk through some names today, but here's the earnings slate for this week. And going to sort of jump into some TA, and we're going to sort of walk through a lot of that stuff today. Tuesday morning, we're going to start off with Verizon, guys. For those that don't know, AT&T just reported, I believe it was Thursday or Friday of last week, and they got hammered, down 10%. These are very interesting names, guys, for a couple reasons. Verizon's dividend per year is almost 7%, 6.9%. So for those that don't know, if you just own Verizon stock, and it does nothing all year long, you make over 6% back on your invested capital. It's one of the largest dividend names, I think, in the marketplace. And so just that size of dividend alone is super attractive for long-term investors. That's 2% more than if you were to put it into a treasury yield. Of course, there's risk, right? If downside in Verizon stock, you'd have to negate that 6% with whatever the downside the risk is. Here is a name, though, from a technical level. If we start to take a look at the weekly and stuff, Verizon's actually trading almost at 2017 levels. This is Tuesday pre-market. So I'm actually not touching this before earnings because AT&T got smacked around by 10% the other day. But if this were to drop, say 7, 10, 12% this week and really retest those 34, 35 levels, which is 2017 supports, I think this would be an area maybe you want to gobble some longer term. Why? It's at a technical level of support, which is basically a 5 to 6 year support level. Not only that, that's where the run started from 2017 when we went from 34 to 50s. Second thing is, as I mentioned, is the dividend. So you're getting in a very cheap, attractive multiple on a name like Verizon. You're collecting a 6% dividend. And then while you're potentially getting in on a great opportunity on where the chart is. So if you get 5, 10% back, maybe on a bounce, right, to the 35s, 38s, 39, 40s, you're collecting all of that bounce premium, but then you're also collecting the 6% yield. So keep an eye on earnings. Verizon is going to be a top watch for the long-term add-on here. And that's part of my 1 of 4 watches for the long-term this week. But I would like to buy it on weakness. If they beat earnings and it pops 3, 4, 5%, I won't be touching it because I think I might be able to ultimately get it cheaper. I'd love to maybe get it around the 33 to 35 zone, which is that 2017 support level, as you guys can see in here back in June of 2017. As you guys know, I like cheap discounts on good, strong names that are sort of growing, or have ultra growth, or have dividend plays. In this market, a lot of folks are hiding in dividends because they're getting that collecting premium per year, right, per quarterly payout. So keep an eye on Verizon. That's going to be a top watch this week, but I'm looking for weakness. We saw AT&T get absolutely smoked last week. It dropped 10% in one day on Thursday, and it recovered 3%, I believe, on Friday. So keep an eye on Verizon, same space, same top competitor. Keep an eye on Verizon. Next one we're going to look into is McDonald's. Quite an insane chart. If you compare this to a Domino's, it's actually only been up about, I think, 200, 300% in about a decade, while Domino's has grown at like 3,000% since the early .coms, the early 2000s. So In terms of McDonald's, as you can see, this name is getting bid up on the weekly chart. If you want to look at the daily chart, it's just a straight line up. We're at all-time highs currently. It's trading at a quite an expensive P if you think we're going into a recession, though. It's a little over 27 times next year's earnings, so it is expensive. But this is a nasty-looking chart for shorts. I mean, if you're bullish and you're long, look at this chart. I mean, it's been a monster. Good management team. They just continue to beat performance. Going into earnings, though, this is still going to be another play where I'm not touching. So Verizon not touching, McDonald's not touching, but I thought it'd be worth a watch because this is sort of where a lot of investors are watching to see, what are their margins going to be. If McDonald's has tough margins, you could see the market really take a nice downside move because McDonald's is the cream and crop in terms of margin expansion over the years. So keep an eye on McDonald's. That's MCD. Keep an eye on what they're saying about their franchises. 3M. This is an interesting one. People are extremely bearish on one and have been, and they've been right. From the 200s in COVID, this thing got a nice pop, of course. But now we're getting to a level, guys. Here's the chart. This is the weekly chart on 3M. Big European presence. I believe that they've had some lawsuits as well. A lot going on here. A lot of negative things. It kind of reminds me of the Intel, which we're going to talk through later. The Intel call that we had around $25 a share, and it popped all the way to the 30s. This is sort of like if everyone hates it, maybe it's time to take a little stab at this one. So I may be trying to play some lotto calls here. And how I'd play the calls is maybe 1 to 2 weeks out in the money, though. So if, for whatever say, I believe this earnings report is Tuesday morning, maybe I'd play Friday in the money, give myself a little bit of exposure to the upside. As I said, this name is now at 2015, 2014 support levels, guys. Look at this chart. I mean, you're down to here. If you go lower than here, I don't even know where a bottom would be. Maybe this, 80. So we are in kind of a scary zone. So it would be a little bit risky playing calls, but I like where it's sort of held up the past, let's say, 3 months in this zone. If they have anything positive to say, this could be a 2, 3, 4, 5% pop Tuesday. So this is why I think the risk versus reward, I'm leaning towards maybe some calls or maybe even just some equity, maybe trying to gobble up a couple percentage points this week. So this is the weekly. It's pretty much in line of where the run started from $100 all the way to 216. We get anywhere below here and you're in no man's land. Then you're going back to, early 2000s, 30 could get ugly here if you break here. So keep in mind, keep risk tight. I'm going to be keeping, risk management tight in here, but maybe playing some lotto calls to the upside. How I look to do that is let's look at the daily chart, maybe even the 1 hour. Sort of the risk off 101, 102, maybe 104, 105 calls for this week. 105 in the money, or you could play next week 105 calls. That's sort of how I look to do it. I want to look at premiums. Premiums are typically very cheap on a name like this. And if it does have any type of positivity, we could see a move up. Given said, if the negative news continues, you could get that final 5, 10, 15% flush washout. So it could be a name, if premiums are cheap, guys, this could be a name you maybe want to strangle. Play in the money calls versus maybe 2, 3% out of the money puts. Could be a nice payday on that. One goes to zero and the other pops a couple 100%. We'll see if that could be a play. I want to keep an eye on premiums for this week. So that's 3M. I think that's an interesting one to potentially play this week. Spotify, that sits in the sort of high beta growth tech. They have earnings coming up this week. No touch for me, but it does have an upside gap up to the 150s from the 130s where we are now. So if you are looking to play this long, you have about a 10 to 12% upside exposure here. That's probably where you maybe want to sell some out, maybe look to switch flips short. It has beautiful pop-off 70s, which was the 52-week low, and all of tech got crushed last year. So it has bounced quite a bit, almost 100% from here. Actually, a little over 100%. Almost 100%, 70 to 133. So it has had a nice pop. This is a no touch for me, but they are reporting this week. For those who don't know, Spotify, sort of that leader in the mobile music. I use the app. I pay for the app. It's great. That and Apple Music. Competitive space, of course. You have YouTube and a bunch of other things, but Spotify has done a really good job. They also have the podcasts and everything. So keep an eye on that one. This is all Tuesday, guys. big one, Raytheon, RTX. Where is it? RTX. Raytheon, guys. This is a name that I will probably be looking to play. Defense name, a lot of marginal revenue exposure to China. And this is a defense name. So if they cannot deliver contracts and, the government starts hounding them about China and things like that, this could potentially get ugly. I mean, this was a nasty drop in 2020 during COVID. I mean, nasty. I mean, this thing went from $146 a share down to 50. I mean, in just a couple of weeks. This is a name where there's upside seems to be capped around. We move this down about a marginal on the top of this wick here, about a 110 a share. Downside here, immediate downside to about $100 a share. 95 a share. Anything below 95 and you have a nice gap fill down to the low 80s. And so that's how I'd look to potentially play this name at least, is potentially playing like $100 puts for either this Friday, if premiums are cheap, of course, or maybe I'd play like puts for maybe 90 strike for a month out is how I maybe look to play this name. So I have my sort of alert set. This one is going to be Tuesday earnings as well. So keep an eye on this one. Could get quite interesting. In terms of after hours, let's go through Tuesday after hours. We have Microsoft, Apple, and Visa. Microsoft, this one is crazy to me. Now, hear me out. I know everyone's going to think I'm crazy for saying this. I think, this is my opinion, of what's going to happen with all these mega cap tech companies. They have been laying off tens of thousands of employees. They're trying to save margins. They're going to try and help their books out. They're going to try and position a positive story, whether it's talking about AI or whether it's this and that. But I want to see the growth. I think the growth in Google, Amazon, Apple, Microsoft, these big names that are sort of hiding on tons of cash, that are now utilizing their cash, saving cash, buying back shares, Meta as well, right? I think they're going to try and paint a positive story, but the growth is going to be abysmal. I think they're going to get crushed on growth. I think margins are going to be okay, better than people are expecting. But here's my concern, is that with all this laying off of folks and people, I think numbers are actually going to come in okay. I just don't know if the stocks are going to pop from there or they're going to drop because they're up so much and people are going to start taking profits. Guidance is also going to be key, and the PE levels are pretty crazy on a lot of these names still, especially Microsoft. You're trading over 30 PE right now. And it's starting to get to an area where it's starting to become more pricey again. In terms of Microsoft, you got a limited upside, I think, to the 308, 312 zones for Microsoft. You hit 310, 312, I think that's sort of I think that's where you probably want to go short. If I get back to 310, 312, I'll be buying long-term puts on Microsoft. If we sort of reject this week, go back down, I think your 260, 270 strike for puts, maybe a month or two out, would be a nice sort of setup for Microsoft. Keep in mind, they're probably going to try and paint the AI picture again, like NVIDIA and all these names have. I just don't know how far this AI theme and, how far it can really go. So let's see what happens with Microsoft. I do think it's extremely expensive. I have not even thought about doing long term. I'd love to maybe gobble Microsoft around the 200 level if we ever get there. I know that people probably think that's crazy. It's at 285 a share, but as I said, I think it's really expensive. It was at 220 earlier this year. Just don't want to touch it up here. I'd rather be sort of look to maybe short it if it pops this week into next, and maybe take some of that risk off. That was Microsoft. In terms of Google I think is the opposite. I think this name has gotten beat up much more than sort of the Apples, the Microsoft of the world, who are basically holding up the indexes. This one we got some limited upside to about 110, 112. So about a 4 to 5% move from here we could potentially see this week. Not a name I want to play. It looks too tight. See the range here? When I talk about price action and range, right? As a name, you want big ranges. That's where traders can make money, right? Up 10%, up down 10%. That's where you can make good sort of spreads in capital with your capital, right? Google's been trading in a tight range, so I don't want to be involved in that if it's so tight. Microsoft's been having a little bit more range. So that's one I'll be staying away from, but obviously watching because it's Google. Let's go to Visa. Visa. Visa's at all-time highs. Now, Visa's interesting, right? They get a cut on every transaction that's swiped. So, everyone's switching to digital, so it's still a really good business model, and it's just been on a tear since 2014. I mean, this is a $50 to $250 stock in less than, 8 to 9 years. It's a 5x return. So this is a beautiful one. I'd be a little cautious here. We've seen Amex sort of get hit, even though numbers were great. This one could be a name where people start to scale out of profits. If I were to play this one, since it's a very slow mover, premiums are extremely cheap, I'd probably look to maybe play the 230, maybe like a 230 put spread for a month out. I'm liking that May strike 230 maybe if you're looking to play it. But as I said, it's at around all-time highs, so the risk-versus reward upside down is sort of not there for me. But if I were to play it, I'd probably look to play month-out puts in case it does get a 2, 3, 4% pullback. Those would be a nice little scalp. That Wednesday after hours, interesting one. Align Technology. I don't know if you guys know this one. This is Invisalign for your teeth. So this is like the braces. But basically Invisalign, right? So it's like you just put the molds in and sort of, you get a perfect smile. One of the leaders in the space. This is down from 700s, but a beautiful pop. As I said, right, as a trader, I'd like to talk about range, right? So let's look at the weekly chart. And these are all weekly charts that I'm looking at, right? So I'm looking for bullish patterns, I'm looking for bearish patterns, right? We talked about 3M, right? This is extremely bearish. It has been sold off, has gotten decimated, but it's now so bearish where I think we could flip it for maybe a small percentage. So I'm looking at 3M, right, for a possible surprise, but also could be a liquidity flush. So 3M could be a nice strangle opportunity, right? So we go back to Align. Let's talk through it. We have a lot of range, right? We're in this range. See my levels here? Upside to 370, but downside to 300. So that's a 10% range gap. I think you're probably going to see a 8 to 12% move on earnings just based on where we are in the range. So keep an eye on ALGN. This is a name I probably won't trade calls or puts because premium's probably quite expensive on a name that has a lot of movement like this. But it could be one of those equities shorts. You could get in maybe short 3, 5, 6% or be playing on the long side up 3, 4, 5%. You should see some nice range and volume this week on this name. This name reports Wednesday after hours. So keep that on the watch list, ALGN. Now let's walk through Meta. Meta is a name that has been bid up by hedge funds, index funds, mutual funds, you name it. This thing everyone has a bullish call to Meta. I think there's a risk to potentially the downside, but as I said, I think Zuckerberg and co here is absolutely doing everything they can to show really awesome sort of quarter, even though if the growth may be maybe slowing. They've been laying off at will, saving money, cutting metaverse spending. I mean, they're doing everything to maybe make the company numbers look great. So it's just a no touch for me. It's up 150% off the lows, 120% off the lows, excuse me. In terms of upside, we're still in this range. We got about a 230 wick to the upside. So if you're playing calls, you think it's going to be a pop, they're going to continue bidding this name up. 230 would be your upside. That's where I'd look to be a seller. 230 would be a full entire gap fill from two of the terrible ERs that we've seen. So 230 is an area where you probably want to start to scale out. If this starts to get back into the 180s, 190s, maybe you want to start to scale in for maybe a small long. Obviously a great company. Let's talk through Intel, one of my favorites so far. And why it's one of my favorites? Because everyone hates it. This hit 25s, and look what happened. We had a study session on this about a couple weeks ago, guys. A triple bottom off 25, which is extremely bullish sign for if you're a bull or long-term investor. You had a bottom, you had a bidding, okay, it said sold off. You had a bottom again, double low, bidding, sold off, and then we finally hit that, okay, I'm done selling, and everyone started buying. We've had a beautiful move from 25, which I alerted in the long group, and now we're over, hit over 32s. I still love the name. I think there is surprise to the upside. Look at this range. Back in 2017, we went from 30 to about, this is up here, to about 40. I'm actually being a little bit more conservative. I'm looking for a price target of about $36 to $38 on Intel. That is where I would look to potentially be a profit taker and seller. I like potentially long calls here for multiple reasons. We have the CHIPS Act. We want to get chips onshore. Intel is one of the world's leader. A lot of people don't really understand that because all they do is get caught up in the hype with NVIDIA. But Intel's huge. They do $60 billion of revenue a year with their chips and technology. It's a huge company. It's been around forever. This is a name that has just been getting decimated over the last few years, and has been dead money for almost 8 years. I think it's a potential time where you want to be looking at sort of dips on this name. So if this is a name that gets, crushed on earnings, I would look to maybe be a long call buyer of the 32 strike, maybe 35 strike. I'll be looking maybe 4 to 6 months out. Premiums get expensive for this one on earnings, so I probably wouldn't be playing weeklies. I'd probably be looking to maybe touch on the. I don't even know if calls would be a play here. I'd potentially even just like to play it through equity, which I have announced off the 25 levels, really that dead bottom where you want to be in at. You've seen a ton of demand from the algo side and buy side here. But yeah, so this is a name I'm watching for a potential flip on the earnings this week, and this name is Thursday after hours right here. Amazon, not even going to walk through that one. I have no opinion on it. I would just be careful. One of my favorite names and setups for this week, I'm going to talk through this one, though, because I do want to chat through a lot of this. This one, I think, is going to be an interesting one. Let's talk through this one. Pinterest. I don't know if you guys know this one. Really interesting chart. It's been sort of dead for a while and consolidating, which to me as a trader, consolidation means a big move coming, either up or down. I'm actually liking this for upside risk to the 32 levels. I know it's 28. That's about a 10 to 15% move. How I maybe look to play this one, guys, is maybe buying calls for 1 or 2 weeks out at the 30 to about maybe the 30 strike. If you're looking to play this week's calls, if you wanted to play Ultra Lotto, this is Thursday morning. So maybe 28 calls for Thursday morning. But as I mentioned, this is an in that probably has some expensive premiums. But I'm looking for a potential beat setup here. It's got beat up a lot off the all-time highs in the 80s and 90s here. In the 80s, sorry. I actually like this name for potential upside. I think it's a great application. Everyone looks on there for inspirations in houses and kitchens and outdoor space. And this is a name that has such great sort of interaction online and mobile and digital and all of that. It's just a well-known sort of brand for that. If they can show that they're starting to monetize the ads and everything, I think it could be a really good sort of story and play going into the earnings. So this is a name that I'm liking, one, for potential swing opportunity multi-month, maybe dabbling on some dips if we get them. And two, I'm looking for a potential surprise on the earnings. We'll see, we'll see if that holds, but I'm looking for the range bound of maybe $30 to $32 a share over the coming days or weeks. This will be on surprise watch because of how much it's consolidated. It seems to be slowly bottoming out. And to me, this is a bottom out single with maybe a weekly flag candle to the upside. That is Pinterest. So we've talked about some of the long-term watches, right? If Verizon, 6% dividend yield sort of gets crushed on earnings, I'm going to look to be a buyer. We've seen AT&T get crushed, and then it got bidded up the next day. Another sort of dividend play in that communication space, right? So keep an eye on Verizon. That's one of my top ones for this week and longer term because they pay out a 6% yield. Who the heck does not like to make automatic 6%? Whether the stock goes up or down, you make 6% on that inflow, which is awesome. Gotta love dividend names in an environment like this where cash is getting really expensive. So keep an eye on Verizon earnings. Next one I said I like is the Intel flip. I like Intel because people hate it, and it's a large chip player, and the whole chip stack in the U.S. I think could really benefit them if they get their act together. Pinterest, I'm looking for upside surprise calls on this name, right? PINS, INTC, and V for Verizon. Two more names I want to chat through this week, guys, for trade ideas. One, Eli Lilly. This name has been on an absolute tear. From 2020 is about 130 a share. It's grown over $250 of share value. Market caps, I believe, in the 300 billions. Now, keep in mind, we have a scanner and sort of data flows that we get around insider selling, insider buying. There's been quite a significant amount of insider selling recently. And that could be for maybe various reasons. They only have a small window to do so. The name is also really on a run. It's at all-time highs right now. They have a ton of really good prospects with, I think, their weight loss, Alzheimer's. They have a ton of good stuff going on. But it is getting extremely sort of overbought. Do we have a maybe 3, 5, 7% pullback coming for this name? Potentially. This one would be potentially a small, very small lotto play for me for potentially puts in the money that expire this week or next week. And this name is Thursday Morning, LLY. And I would hate to buy sort of puts on this name, but given how strong it's been, it could just drop 2, 3, 4% just from profit takings alone, or they say something on the call, or it could be of any reason. And I just don't think how is this going to pop 5-10%. It could continue higher, but it hasn't really had many pullbacks. Sort of reminds me of a Nike when it went on that big run, or a Caterpillar per se when it went on that big run. It's similar charts to me. So it could have like a 3 to 5% pullback over the next coming weeks. It's a tricky one to play. Maybe May sort of in the money puts, 380, 375 puts. So I'm going to be watching for that. Daily chart closed at around 384. So keep an eye on LLY. Has supports back down at around the 300 level. Immediate supports at 370. So that's how I'd be looking at LLY. As I said, great company. It's been on a great run. A name I'm very bearish on is LUV, Southwest Airlines. I think it's probably the worst airlines out there. Many are probably laughing right now or agreeing. I like Delta. I like United. I just think Southwest has had a ton of trouble. They had that huge outage, I believe, and tons of customer complaints a couple weeks or a couple months back. The chart is pretty ugly, so the chart is saying the same thing as people are saying. Typically, when you start to get a really bearish sentiment on this stock, yes, you could get a bounce, but I'm liking a potential pullback on LUV to $30 a share. How I may look to potentially play this is buying May or June $30 put strike. Therefore, if this stock sells off 5 or 10%, those puts will be immediately in the money for May or June. IV will be a lot cheaper than if you're playing weeklies. Keep in mind, this is a name that has earnings, I believe, for Thursday morning. So it could potentially be a lotto play as well for the week. But as I said, I'm liking it for a potential retest of these 2020 levels at $30 a share. Ultimately, I think the downside could hit $24, $25 a share. I like this name short still. That is LUV, Southwest Airlines. Although I am bullish on airlines overall for the next couple quarters, I do not like LUV for chart reasons and a bunch of other reasons that I just mentioned. So that's that. I tried to cover all the earnings this week. That's going to be my top focus from trade opportunities. I want to discuss SPY quickly because this, guys, a lot of people have been like over trading. I see a lot of people have complained about the markets. Just sit back. Don't trade if you don't have a trade. Cash is always king. Sometimes the best trade is just sitting there on cash, waiting for an edge, waiting for your opportunities to strike long or short. Guys, this market has been extremely range bound and boring. Maybe the last month and a half, 2 months. Lots of market makers cleaning up options, cleaning up premiums, selling spreads, buying spreads. I mean, it's just slow. We're so tight. Look at this daily chart. We're just so tight. Just from, March, we've been just sitting here. I mean, it's just really tight. And so I think over the next 2 to 3 or 4 months, we're going to see a big 5 to 10% move up or down. For the SPY, we have upside to 420, 425 a share. And then I think there's a huge risk reward to the downside. In terms of SPY being bearish, I'm not in the huge bearish camp. As I mentioned, I think companies are doing all these layoffs to protect their margins and some of the numbers. And so I just don't think we're going to get that capitulation in earnings just yet. I've pushed my sort of bearish case out about a year until cash becomes so expensive where people are going to get crushed. And so I think there's upside to the 420. If ultimately we ever got back to SPY 450, that would be like the all-in short for me. I'd be buying long-term puts at that level. I think it would be super unsustainable if we got to 450. That would be like my capitulation for the bulls sort of scenario if we got up here. 420, I think the risk versus reward is maybe some potential start to scale out profits and maybe try and flip short. I'll probably be trying to do that as well in the 420 zones. That would be a full year of profits from under here. So that would be a 350 move to 420 in a span of 1 year. This is August timeframe. So if we got to 420, 425, 430 by August, that would be a 1 year high. That's probably where I'd look to scale out. Back in April of 2022, that's sort of where the selling started to ramp up. So we're going to start to get some heaviness, some resistance here, guys. And I think sellers will probably start to double down, triple down in these zones. So keep in mind, Chart looks good for upside to the 420s, but keep in mind, there are some bears out there who would love to double, triple down at these levels just from technicals alone. They've been waiting a whole year for it to come back to this level. People would love to maybe risk off, as well as longs taking profits, because market is still extremely expensive here. And so that's where we're sort of at in the indexes. This is a big week, though, guys. We have Exxon and Chevron reporting Friday morning. Huge market weights for the energy sector. So get your weight vest on, get your seatbelt on. It's going to be a crazy week. There's going to be a lot of jolt movements. Just be careful, protect your risk. Don't be greedy. If things are dropping 10, 15%, scale out those short profits. If things are popping 10, 15% on the long side, maybe you want to scale some out. Greed kills in this market. We've seen things go up 10% on a large cap name like a Tesla, up 7%, and then down 5% the next day. That's why it's been such a challenging market to trade this year, because there's no true direction. Tech's up one day, the next day it's down. Dividend names are up huge one day, the next day it's down. There's no trend. And so therefore, when there's no trends and continuation trends, traders have a really hard time. And a lot of traders are not doing well this week. The big professional traders, the street traders, prop shops, hedge funds, no, not a lot of people are performing well. And, there's a lot of the reasons, as I just mentioned, on why. So I think this week will maybe branch us out and we'll start to get some true direction potentially. But I think there's going to be a lot of opportunities. And these are some of my top watches this week. I'll do a quick couple Q&A here. I tried to do a very fast session for everyone. I hope it was helpful. I did a lot of the drawings. I'll do some screenshots later in the Discord. But yes, if you guys want to shoot some questions, we have a ton of people on live chat right now, which is great. Hopefully this session is helpful. I do these sessions. I prep 2 hours. I do them so that you guys can come in and say, okay, these are my levels. These are the ranges. How can I make my trading around that this week? If you're scalping a couple percentages, the resistant levels, your profit levels. It's all just preparation. And as a trader, study and preparation are the keys to being successful. So hopefully this is a really helpful session for everyone. If you could put some comments or some questions on the sidebar, I'd be happy to try and help answer or do my best to chat through some of that. Shoot away on the questions on this side if you guys have any. I will try my best to answer. If I don't know the answer, I'll just obviously just chat through it. Please discuss BBY. What do I see here? Hold on, let's see. Yacht money, please discuss BBY. I mean, I'll jump to it. I'm not going to stay long on it. Obviously, a heavy liquidity name. I think there's bankruptcy news on it. BBY, I mean, bankruptcy news. I don't know if that means I imagine maybe delisting, OTC, or just shut down. And I'm imagining probably goes to pink sheets. So looks like BBY, the support here on the daily is about 23 cents. It popped to 48 cents. Bankruptcy names maybe have a leg or two left before they just absolutely be a total fader. Now, it just did have a pretty big run of about, 23 to 56. So it ran over 100% in 3 days. I don't know if that was the bankruptcy run, and then now this thing just gets shorted to oblivion and sold off. Don't know. Keep an eye on that one, though, I guess. Hopefully that was helpful. Yeah, I probably won't be touching it or trading it. Not much opportunity for me there. JTOGs, market looking kind of double toppy. Yeah, market's starting to look a little bit toppy. The volume's really slowing down, which is never a good sign, which means there's not much conviction on the upsides here. And that makes sense. Who wants to be buying this at this high level, right? Can you explain the Moen chart? I'll take a quick look on the Moen chart. Let's see. This is the daily chart. Maybe I'll do the 1 hour. No, let's look at daily better. Moen big volume days. Looks like it's sort of a lot of demand around the 9 levels. Big volume days the last couple days. 700 million on Friday, 235 on Thursday, and then 2 weeks ago we had a 420, 450 share day, followed by a 780, 500. So there's been a lot of volume on this name around the 8 to 15 cent range. If maybe you're long Moen, I think there's some upside room to the 14s and 15s if volume continues this upcoming week. Downside rejections would be to the 8 and 9s. Ugly looking chart. But yeah, this would be like sort of a liquidity scalp play, similar to BBY if you were in the 20s or 30s and scalped it up to the 50s. That's sort of how I'd be playing Moen. But yeah, obviously this is a micro penny name that's gotten decimated. Chart looks okay though. Down in here, the volume's ticking up, which is always nice to see. But obviously it's a micro penny, so anything could happen at any time. I would just be really careful with a name like that. Thoughts on Tesla? Tesla, tons of downgrades, as sort of expected there. Tesla's hanging on by the 165. 165 is the line in the sand, and bulls are trying to hold it. If you start to get below 160, guys, Tesla can really start to fill that 145 gap quite quickly. You get back into the 139s, 145s on Tesla, I think it'd be a nice opportunity for a potential long pickup there in the 130s, 140s. If you can get there. Not sure if it gets there, but that's sort of where I'd be looking to long, maybe in the 130s for a scalp. Hopefully that's helpful on Tesla from a chart TA perspective. KO earnings, I don't know any KO. I don't know when that is. So the KO earnings I'm not too sure about. But you probably have a better understanding than I would. William chillin', what's going on? Spud, what do you think of Lyft for upside or fast trading? Lyft, you mean Lyft like Lyft the company, or Lyft? What do you mean? You think of Lyft, or just if you could ask that question again, William chillin'. I'll try and look through it. Yacht money, thank you, no problem. Hopefully that was helpful. FRC, J-Togs, yeah, not touching or even gonna watch it, frankly. Yeah, I maybe I'll touch it if via equity. I would never touch that shares or calls. I mean calls or puts, because I think it's extremely expensive, and so there's I don't know. I don't know how that name's gonna move. Lyft. Lyft has earnings this week, or last Lyft the stock. Got it. LY. Yep, I know Lyft. Another name I think that is extremely hated. Everyone loves Uber. I actually use Lyft app a lot when I'm sort of mobile and traveling. I think the app's great. I actually enjoy using it more than Uber. I think the prices are cheaper. But from a company perspective, I don't think they're doing well. Earnings are on, it looks like May 4th, if that's right. So not this week. They're going to be the next week following. I don't have any bias into it, although the chart is just extremely ugly. It's looked like it's bottom around 8s and starting to get bidded up around the 9s to 10s. So, if you continue to see consolidation in the 9-10s, maybe this has a nice pop back to the 12s, 11-12s. Could be a 10-20% upside play, but I would be cautious with this one. If you're playing it, if you're playing it by shares, maybe you want to be keeping a tight stop loss, 10-15% on the equity in case it continues lower. But to your point, it could have a nice sort of risk to the upside here into the 11, 12s, 13s for potential 10-20% pop. That's how I'd be looking at Lyft here, maybe into earnings. But yeah, cool. Any other questions, guys, on the side? If not, appreciate everyone coming on, and hopefully the session was helpful. If you could write some in the comments on the right, anything I can work on, do better, or do for you guys next time. I prepped a lot of the TA, and it's going to be a huge earnings week, so just stay focused. There's going to be jolt movements. Focus on your edge. Focus on what you guys do well, and I think we'll finally start to see some range and percentage movements, and that's what we want as traders. We want movement. It's sort of been dead in low volume. SPY had its lowest volume in I think over a few months. That was on Wednesday. So there's not a lot of conviction and volume in the markets out there. Liquidity's drying up. Everyone's sort of sidelines waiting to short or long. So just be ready, be prepared. I think we could potentially see a nice sort of move in either direction over the coming weeks or months. So be prepared to trade. Hopefully we can find some good plays and setups out there. Awesome. I'm going to head out. Hopefully that was helpful. I will jump on next week or the following week with you guys. But yep, hopefully trade well, guys. Enjoy earnings season. Enjoy the rest of your nice weekend day. Let's go Knicks, of course. And cheers, guys. Have a great rest of the weekend. And I'm looking forward to a good trading week. Bye-bye.